All right. Good morning and good evening, as always. And this is your host Harsh again. Welcome back. Uh, we will start off with Dow Jones as to what the wave structure is looking like after a potential bottom being carved just below the 45,000 mark. I think this was expected and discussed last week as well. Going aggressively longs are quite risky and ruled out. Basically, the strategy to deal with it is the world indices right now at this moment is to wait for a corrective rally and then go short at higher levels. Let's look at let's start off with Dow Jones. Then we'll also touch base with gold. Now we've got some levels in hand where we can probably execute uh, potential trade setups. And yesterday, due to the network error, the crude oil was left incomplete. So we will cover that today. Excuse me for yesterday, we could not complete, and we'll also touch base with the euro. All right, so sit tight and enjoy. And if you do have any comments or suggestions or anything more that you want to have in these sessions, as before we begin the session, a humble request again. This is just an educational uh, attempt. Please do not construe it as an advice or encouragement to trade, but this is for the traders by a trader, and let's build this together. All right. You might want to be subscribed if you're liking what you're seeing, and also help spread the word. Thank you. Okay, looking at the last major wave, which was a minor degree, wave 5. I've just labeled, actually, it's wave 5 at minor degree, not only minor but four levels: minor, intermediate, uh, primary, and possibly channel as well. Just a moment, I'll change the degree from this is minor wave 5, which should be subdivided by 5 waves of minute degree. Okay, at times it gets delayed, but we'll quickly change it to minute now and then move forward. The action is on the right hand side, so all right. Five five waves of multiple degrees almost got completed around the 51,000 handle. just below the 51,000 handle. And what we see on the right hand side is again an impulse wave of a lower degree. Maybe we can touch base on a 4-hour chart, and we'll again pick up an impulse. That was wave 1, 2, and then all the way wave 3, subdividing into 5 waves. Four and 5. This could be the first wave of the minute degree, so we need to change these minute day. Once again, the structure, 5 waves lower, almost complete. We've got 1, 2, 3 sideways, 4 and 5, that is wave 1, and then corrective wave 2. Previous wave 4 stops at previous wave 4. And then we've got wave 1, wave 2, wave 3, again wave 4 and 5, that is the third wave, and 4 and 5. Now if this is what it is, then the boundary which is being worked upon right now is right from the 51,000 handle to the 45, or just about the 44,700 mark. Tell you what, we are still waiting for that corrective rally to materialize. I don't know if we are going to get uh, we are going to get a chance sooner. I think this series should give us that opportunity. We've been waiting since long. Actually, we went short earlier personally, but not in these sessions. We have been waiting for that impulse wave to complete, and then the corrective wave also to mature. Now, if this is the boundary which is being worked upon, then the resistance begins from 47,000 and it extends all the way towards 48,700. So that is the zone where bulls might want to pause and bears might want to come back again. Alright, looking at this, it is still a 3-wave rally, maybe one more push higher towards the 47,000 handle. See, it is as simple as that. Okay, so the Fibonacci numbers are also in place, boundary is also in place, which is being worked upon. So we know where we are normally headed, and what directional trade could be potentially picked up. It could be the first wave A and a minor reactive B wave, a corrective B wave, and then wave C. So this is the region where resistance is expected. So 47,000, between 47,000 and 48,200. The potential short entries might be taken. Risk remains at the top, 51, almost 51,000. And the reward we have already discussed. We will do that again. But potential trade setups for short around the 47,000 range, 48,200. Ideally, the stop loss would go at the top 51,000, and the target is open. All right, sir. So this sums up the Dow Jones, and before we move on to gold, euro, and crude, let's also do a potential target. Should be around 36,000 easy. There we are, somewhere around 35,000 mark, which is the previous wave 4 of one larger degree as well. So yes, I mean, going long is ruled out. Even if you want to, as an aggressive trader, it's too risky. You might get stopped out. It's better to wait for corrective rallies. I mean, 47,000 is not too far. Partial entries around there and remaining around the 48,200 makes a lot of sense actually. Okay, let's flip the chart to gold. I think we we will be touching base with all charts whenever possible. Okay. All right. That's the story I think we discussed on Monday for gold, and this is the reason why I'm bringing up again. So we we are uh, we are in the corrective phase, correct? A, B, C of to complete that intermediate wave 4. These are minor degree A, B, C, which we projected Monday, and that is the fourth wave, which might have just carved today. All right. If this is correctly done, then we are now looking for the fifth wave to materialize, and it can take the rest of the series. Actually, the April series. We'll also have to adjust the Fibonacci ratios. It's just pulling back towards 4750. Now 39,000, 3,900, or just below that 4,000 mark is where uh, a potential bottom could be carved for gold. All right, that's the daily chart, and we flip the chart to a 4-hour time frame. All right. So this path has now shifted to wave 4 there. Instead of the sideways triangle, which we were expecting earlier. I might just smoothen the wave. That is wave 4, possibly around the 61.8%. The potential trade setups, I would say, resistance. I mean, you can have your stop loss around the 5,000 mark as well. So potential shorts can be entered around this price. Also remember the lower degree wave 4 is being tested right now. Makes a lot of sense for bears to come back in control around these levels. But the 61% is just around the 4,800 mark, so we cannot rule out that option as well. Having said that, the stock would go just below that wave 1. If this is wave 4, prices would ideally stay below that mark. So 5,000 could be the stop loss. couple of 100 points of risk, and the reward goes all the way down towards 3900, sir. All right. So here's the potential trade setup for gold. Short around the 47, 50, 48, 100 zone. Stop at 5000, maybe 5010, and the target 3900. Could possibly go towards 3750 as well. You never know that spike, but 3900 is good enough for us. Better exit before the noise. Okay, quite volatile at this point in time. 54. Okay, you cannot. I mean, I would not rule out the possibility of 4800 touch. All right, that's the story in gold. Now we have something on hand where we can actually commit. All right, and I think we touched base with the Euro USD at the day. And we were discussing about a potential bullish scenario the other day, right? Which is possibly materializing right now. We've got wave one of the lower degree. So that particular drop from 1.21 handle could be a corrective decline, uh, printing a minor degree wave 2, and if that is correctly done, then minor degree wave 3 could be just beginning to cut loose on the north side, and if it is, then euro has already rallied, I mean, a couple of 100 points from what we discussed, I think, on Tuesday. So you might want to remain on the long side. Now the stop losses, I don't remember the exact price when we discussed, but the stop loss can be now shifted to 1.1440 from 1.1400. I think if it's the third, you've got wave 1, 2, 1, 2, and this is wave 3, the third of third wave completing, which has almost rallied 160, 70 pips, maybe a slight wave 4 and 5. So this is just beginning to cut loose on the north side. And if we see the counter trend, let's see if it is into the buy zone now. Yes, it is. In case if you have missed the rally, I mean, the backside of this trend line touch can be utilized and can be seen as an opportunity to get onto the trend actually. All right, so that's the story, quick recap for euro on the long side, and now an interesting chart. It's the labeling. I have not moved. Vivek, if you're watching this, it is a 1 year old labeling which was done. I think the last was around April 2025. This is what we were discussing yesterday when uh, the connection dropped actually, and I could not reconnect in time and bring up the daily chart. All right, this is what was done. almost a year back. The reward was around 72 and 81, which was right right there, previous wave 4, that minute degree wave 4, correct? And it actually bottomed out almost, so I'll have to readjust. After the session was done, it took a drifted sideways for a while and then bottomed out around the same level. So risk was just below 55. So the structure doesn't really change much. So these two were the targets which has been met already. So what I'm trying to say here is the story was being carved almost a year back. It was, and that's what is the most interesting part when you're not into news-based trading or noise-based positioning. Uh, the entire structure was an ABC, five down A and B, and then uh, a diagonal, potential diagonal, a possible diagonal. I think wave 3 should be shifted here now, wave 4 there, and that is what it is. Okay, so that's the history. Now what has happened on the right hand side is nothing surprising at all. Now if this is wave 1, 5 waves, 1 2 3 4 5, a potential leading diagonal, and wave 2, uh, we are looking, that's the third wave. Wave 4 is being carved out, and the next story is again without any surprise, irrespective of what the outcome of the ongoing Gulf situation prevails. We still have further upside to go, because this is just the third wave, which might be complete, or let's say it's with the strong push. Let's say it's wave 3. That means wave 4 is being construed, being drifting sideways for a while. Okay, so it can drift sideways for a while, or it may drift even lower towards 83 or 75. If that is, and that would be wave 4 and then wave 5. If you try and project what it could be, it starts from this low. That is wave 3, a hypothetical wave 4, and there are 123 could be wave 5. So that would be 5 waves complete of the first degree, and then a corrective decline, wave 2. So crude actually has much upside going forward. It's going to take some time because that rally was quite sharp and steep. So it's going to take its time, but 123, post 123, expect a corrective drop towards 80s, and then again a resumption of the uptrend. All right, sir. All right, Vivek, I think this was what you wanted. And if you do have, for all the others, if you're watching this live or recorded mode, uh, feel free to send a message anytime to let me know what else is required or needed, how I can help you. These sessions might be elongated. We can do in a different language. Another one session added. You can add theory. Just let me know uh, what is needed, and we will work around that. All right. Once again, thank you for your time, and until tomorrow, good luck to your trades, and please take care and God bless. Goodbye.